The sky is falling. Sell everything. No, no. Hold your horses. There is hope. There is another. Fear, anger, aggression lead to the dark side, do they? Look, in 1998, economists and analysts were expecting recession due to the Russian and Asian financial crises. But surprise, surprise, the USA in that time was able to avoid an economic meltdown, at least for a while. The Fed, believe it or not, was actually able to stabilize the economy. And as a result, the US experienced continued growth. Markets boomed. Dot-com bubble played out. Should we expect a similar miracle in 2024? AI bubble playing out? Stick around till the end. You can decide for yourself. So let's dial back a bit in history. What happened in 1998? I know this is ancient history for some of the younger viewers. Hey, I was a teenager back then, so I wasn't paying attention. Market's getting high, man. But let's take a back step back in time here, okay? 2 years before the start of the new millennium, the global economy is rocked by the Russian and Asian financial crises. It was the end of the world again. In Russia, the crisis began in August 1998 when the government devalued the ruble and defaulted on its debt, leading to a severe economic downturn. Meanwhile, in Southeast Asia, Thailand faced a severe financial crisis that began with the devaluation of its currency. The crisis quickly spread to other countries in the region, causing economic instability across several nations. It was, a crazy time, man. Surprisingly, the U.S. economy was able to thrive during this period. Now, fast forward to 2001, the dot-com bubble had burst, ending the U.S. economy's decade-long massive expansion. This led to, of course, gigantic losses for investors and a sharp decline in technology stocks in particular. Adding to the economic woes, the tragic events of the 9/11 attacks further shook the nation, the economy, and the markets, pushing the U.S. into a deep, dark recession. Markets got tanked hard. Today, analysts and economists are debating whether right now we are in 1998 or we're in 2001, aka we still have a lot of fuel left in the tank, or it's the beginning of the end. Repent now. Bearish indicators like the SOM rule, the inverse yield curve, they are clearly warning us of a potential economic disaster. Stormy skies ahead. However, there's also another side of the story. Some indicators say that we are not yet done with this bull market cycle. You still could have a few chances to extract money out of the markets before everything goes to hell in a handbasket. Now, real quick, before we dive into those things, the markets, the rate cuts, etc., I want to take a quick second to let you know about the Wealth Mastery newsletter. This is your weekly guide to all things crypto. We cover meme coins, altcoins, airdrops, NFTs, DeFi, and much, much more. You can join our 140,000 plus weekly readers for free. Check it out. Link down below in the description or the pinned comment over on X. Our readers love it. I'm sure you will too. Go check it out. Now, despite all the fear surrounding the economy, the stock market has proven to be surprisingly resilient. It's pretty crazy. As of August 2024, the S&P 500 ended just below its record high and is now up at 19.09% year to date. The S&P 500, of course, is the barometer of the country's economy, and this impressive performance is indicative of investors' confidence in how the market is doing. This is the same scenario in 1998. Despite the global financial crises that were playing out at the time. Yen carry trade of 2024, anybody? Anyway, the U.S. stock market showed remarkable resilience. The S&P 500 gained 26.67% in 1998. Hot. Another positive development, of course, is the actions or expected actions from the Federal Reserve. For the longest time, the Fed has maintained a steady approach to interest rates, keeping the target range of the federal funds rate of 5.25 to 5.5% since July of 2023. However, the Fed's higher for longer approach is about to end. Inflation has eased substantially over the past year, is now closer to the Fed's target of 2%. Unemployment is rising. The Fed needs to deal with that, which is why they have to start cutting rates. Fed Chair Jerome Powell himself has said that the time for interest rate cuts has come. Because of these positive developments, traders are now pricing in the possibility of a rate cut this September at almost 100%. Lower interest rates will make it cheaper to borrow for business expansion and to invest, of course, in risky assets like stocks and crypto. Back in 1998, the Federal Reserve under Alan Greenspan stabilized the economy by cutting interest rates in September, October, and November. It is uncanny that we also expect the first Fed cut this September. Will it be followed by a few more? Who knows, but the markets are expecting that we could see up to 100 basis points of cuts this year. And it was certainly bullish if that happens. The U.S. economic growth also shows some promising performance. The gross domestic product has increased at an annual rate of 3% in the second quarter of 2024. Where's the recession, man? Where's the recession? GDP growth at 3%. Get out of here. We have to remember the textbook definition of recession, of course, is 2 consecutive quarters of negative growth. We're not even near that, not even close. And I know that they've changed the way that they define that, but still, It's not here. In comparison, in 1998, the U.S. economy surprised everybody with an annual GDP growth rate of 4.5%. Let's talk about jobs. So jobs, man. Unemployment rate's the big story of the day. The U.S. job report, of course, a crucial part of the economy. Jobs put money in the hands of consumers, who in turn give it back to the economy by spending, and who give it to the government through taxes. Okay? To be honest, the latest job report could be better. According to the August 2nd Bureau of Labor Statistics, or BLS report, the unemployment rate is up to 4.3% in July from 4.1% in June. In comparison, in 1998, the unemployment rate was ranging from 4.3 to 4.6%. That's interesting, isn't it? The sky wasn't falling back then. The silver lining is that the percentage is not all that different, right? The U.S. economy was fine in 1998. It might actually just be fine today unless we see a massive surge in unemployment moving forward. The doom callers will tell you that it's going to happen, and maybe they're right, but so far it hasn't. So if we put this together, it seems like we could be potentially staring down a repeat of 1998, wherein despite all the doom and gloom, the U.S. economy was still able to grow and thrive, and we could see the AI boom be equivalent to the dot-com boom, pushing us into a final rally for the market. Now, I know you're going to say, but Lark, what about the SOM rule? What about the inverse yield curve? A ticking time bomb. It's uninverting right now. The expectation of a recession 6 to 18 months after the last Fed hike. Well, we're almost up to the 18-month mark on that. Plus, there's wars everywhere all the time. South China Sea. Have you seen what's going on in South China Sea, man? Come on. People in the bushes, man. Well, those are very valid arguments. We can also say that usually an election year is also a bullish thing. And if Donald Trump wins, the crypto market could potentially benefit from his policies and make new highs. Also, don't forget that if this is 1998, then 1999 is coming, which will be the market peak. You need to sell, run away, and don't look back for a couple years. The thing is, there's always two possible scenarios. The trick to investing is learning how to manage your risk, to have contingencies in case the crap hits the fan, because every so often the crap does hit the fan. Okay, you have to be ready for that. Have cash on the sideline to be able to invest during those times. I'm a big believer in crypto, of course. The 4-year cycles continuing to play out, probably. So I think the bull run still has one last hurrah before everything falls. I've got a deeper video coming out in a few days to keep an eye out for that. But I'm also a realist. I know anything is possible. And for all we know, the recession starts next week, right? I plan to take profits once in a while, even though I believe we haven't reached the peak yet. When we get some nice pumps, time to take some money off the table just to be safe. Think of it as reverse dollar cost averaging, right? The goal here, capital preservation, because you never know when the bad times are going to come. I know it's been kind of bad times for cryptos here, but not for stocks. I might miss some gains, but it's about staying in the game. It's about surviving, right? Don't get me wrong. The bear market will come, but the question is when and how severe. The recession will come. The question is when and how severe. It always does. It's a more part of the business cycle. Just make sure that when we do get the next big rally in the market, whenever that is, that you take some money off the table and you prepare for bad times in the markets. Remember, it's like that parable of the grasshopper and the ant, right? The ants prepare for winter and they're ready. The grasshopper spends all summer partying and then he dies a horrible death out in the cold of the winter. Don't be the grasshopper, man. Don't be the grasshopper. Long-term thinking here, guys. Thanks for watching.